How can investors make money in emerging markets in 2015 and beyond?
Our focus is very much on active management. We feel that the benchmarks in emerging markets are very skewed towards, countries where we don't really want to be invested in, like, China, South Korea, whereas we're very positive on India, which is a very small part of the index. So we are very much looking for active management. And within countries, again, it's particular sectors to benefit from structural change happening in those countries we're positive on. So it's very much active both on the equity and the bond side within emerging markets.
Nathan, is that a similar view?
I think I'd have to agree with Mina on that point. We definitely see opportunities within India, but I think at a headline level we are slightly cautious on emerging markets. There are a lot of headwinds. You're seeing GDP growth is slowing in some of the key areas such as China, but on the flip side of that, you're actually seeing GDP improvements in India. So we're looking on an opportunistic basis for where to invest. So from our perspective, it's about selecting good managers who are focused on core opportunities within emerging markets, and that's why we look to companies such as Standard Life.
What interests me most, I think, about the whole debate is we're stuck with emerging markets now. It's a label. But in actual fact, the individual countries are emerging themselves, and you sort of wonder why we're tagging everybody with the same level of emerging markets. But India is an interesting one. I think Modi's the first prime minister in history since independence that has actually really grasped the nettle. And I think it's quite exciting. But as Mina was saying, we support active managers because it's their job to decide whether they're going to be overweight China or underweight India. Yeah. So, we're very positive on emerging markets. But as John Thornbury was saying in a different panel, it is a sort of longer term thing. I don't think the widows and orphans should go into emerging markets on a 6-month view. But as part of asset allocation in model portfolios, we're very supportive.
I think there's a real cyclical or tactical opportunity there as well in terms of wider than average risk premia in a lot of these markets. Valuations are pretty good. And I think if an asset allocator can get down to a regional or a country level view as well, those opportunities become even clearer. So whilst there is a role for an active stock picker, I think the active asset allocator's got a role to be in the right markets. There are clear valuation opportunities. There are clear benefits from the from lower oil prices that will feed through, particularly to many of those Asian markets. And I think that really does open up a really interesting area for investors.
Alex, would you like to put a macro view over this?
I think over the coming year, because a lot of economic growth and earnings growth will be driven by productivity gains. And one of the themes that we've talked about is politics, and these reforms, at the very heart of them, are to increase productivity in the economy. Just like the goods and services tax mentioned in India, what that really will do is just make the economy more productive. It will increase productivity of labor and productivity use of investment. And so these reforms and the increase in productivity that you're seeing, especially with the embedded technology and new investments you're seeing in a lot of countries with low GDP per capita, sub-Saharan Africa, India, you're seeing them able to make leapfrogs over what the developed markets did in their growth. In terms of India is another great example. I know we looked at India a lot today, but in terms of what they're doing, opening bank accounts in much of rural India, and they're just using the new identification system that's based on biometrics, just a fingerprint and iris scan, and they can open up a bank account just using the fingerprint, and then that bank account is tied to their cell phone, and they're able to make purchases with their cell phone. And so they're seeing just leaps and gains in terms of efficiency and productivity with the technology that's embedded in a lot of their investment.
Alistair, that's an innovation, isn't it? Are others that have caught your attention particularly?
Well, I mean, there's so much positive change happening in the emerging markets. I mean, the ones that Alex mentioned, the boom in smartphone penetration, e-commerce, alternative energies, such as the potential boom in electric vehicles. Obviously, we talked about the huge infrastructure opportunities in India. I think the interesting thing is that these are all very positive changes, but they're not well represented in the benchmark emerging market indices. So really, to get the best of emerging markets, you have to get off the beaten track. away from the blue chips, away from the state-owned enterprises, into small mid-caps, some of the less well-covered frontier markets, and take a bottom-up approach to really get the most dynamic parts of change in emerging markets.
I think it's perhaps worth saying a word for stability as well. We've talked a lot about positive reform, but sometimes coming out of a bad situation just into a stable situation can be very positive. So, Egypt, has been a great market. That's obviously had a benefit from the oil price as well. But, before the oil price was a factor here, just having a more stable situation enabled, very significant equity returns. Thailand would be another example. We had the coup in Thailand, and but it was fascinating meeting Thai businessmen immediately after that coup, and they were so excited, much more excited than we would. We'd be inclined to be anxious about that, but they would say, "No, you don't get it. This means now we can actually go and do business. We can actually get things done now because we know what the score is, the stability." And that enables entrepreneurship to function, and that's what we're looking for, in investments.
Right. Where are the Standard Life investment managers seeing the best opportunities? Would you agree? And I think you've sort of answered this, but let's recap. Would you agree with the suggestion that many of the most interesting areas are outside the large index names?
Yes, I think specifically on internet stocks and e-commerce stocks within that, then the bulk of them have been listed on developed market exchanges, so principally NASDAQ, partly because of a more informed investor base. But this means some of the most exciting opportunities have not been part of the benchmark. And it's very intriguing the extent to which MSCI are now starting to realise that, and they're going to change the mainstream emerging market indices. So the likes of Baidu, Alibaba, companies like VIP Shop, which has been a staggeringly successful investment for us, are now going to become index stocks, so potentially looked at by a wider cross-section of individuals. And it's not just China. I mean, if you look at a company like Mercado Libre, which is the eBay of Latin America, although a large proportion of its business is done in Argentina and Venezuela, so as we know, dreadful countries from a macro perspective, it's still been a successful investment because the power of a stock-specific change has been enough to offset the macro disadvantages.